Process costing is a little different from job costing. Instead of accumulating costs for a specific job, process costing accumulates costs for the production of large numbers of identical items like peanut butter, ice cream, cars, or toys. Process costing accounts for costs in phases of the production process called departments. Materials, labor, and overhead are placed into production in the first department. Then the units are transferred to subsequent departments where additional labor and overhead are added in order to complete the product. The cost of the units transferred out of each department must be determined along with the cost of any partially completed units remaining in the department at the end of the period. The cost of production report summarizes the cost data for each department. So in this video, we are going to go step by step through the cost of production report. So we've got a sample company, Bavarian Chocolate Company. It processes chocolate into candy bars. The process begins by placing direct materials, which consist of chocolate milk and sugar, into the blending department. All materials are placed into production at the beginning of the blending process. After blending, the milk chocolate is then transferred to the molding department, where the milk chocolate is formed into candy bars. The following is a partial work in process account for the blending department. Okay, so what we're going to do in step 1 is determine the total number of units that we need to account for. So that's pretty easy. We just take the beginning 2,300 units. These were in process at the end of September, and so at the beginning of October we've got 2,300 units in inventory, and they're partially completed. Notice it says they are 3/5 complete. That's going to be important a little later on. Okay, then we added materials for 26,000 additional units. So the total units that we're going to be accounting for is 28,300. The 2,300 from the beginning balance, and then the 26,000 from the units added. Okay, now we need to break down these 28,300 units into 3 categories. The first one is inventory and process on October 1st. That's a pretty easy one because it's given to us. So we just pull that from right here in the problem. So that's 2,300. And now we need to figure out the number of units that were started and completed in the month of October. So they got 100% completed during the month. So the way that we figured that out is we see that 25,700 units were completed and transferred out. So we know that 2,300 was in process, so they could not have been started and completed. So if we take the 25,700 and subtract the 2,300 units that were in process at the beginning of the period, we get 23,400 that were started and completed. They were 100% completed as far as materials and 100% completed as far as conversion costs, which is labor and factory overhead. Then we need to figure out the inventory that was in process on October 31st. Okay, this number is not given, but we can figure it out. All right, we know that we had 28,300 potential units. And if 25,700 were completed and transferred out, then we know that 2,600 is the amount still in work in process at October 31st. So just to review, to figure out the number of units started and completed, take the units completed and transferred out and subtract the beginning inventory. To get the inventory in process on October 31st, take the total units that you're accounting for and then subtract the completed units, the 25,700. Okay, so now we know that there are 28,300 units that we have to account for, and we need to figure out in step 2 the equivalent units of production. In process costing, we're working with whole units, those that were started and completed, and equivalent units, those that were in process at the beginning and the end of the period. So we are going to calculate the equivalent units for the 2,300 that were 3/5 completed and the 2,600 that were 1/5 completed. So one thing that we need to remember when we are calculating equivalent units is that materials are always added at the beginning of the process. We're assuming that, and that happens quite a bit in the manufacturing process, especially with chocolate. You know, all the materials were added, the milk and the cocoa and whatever else it was, they were just added all at the beginning, and then in the blending department they got blended together. So for the 2,300 units that we received from September 30th, remember this is the work in process on October 1st for the blending department. So we're starting with 2,300 units. The material was added to these 2,300 units back in September. So for materials, we had no equivalent units because all the materials were added last month. Now, as far as conversion cost, we had to finish up, okay, up here it says that these 2,300 units were 3/5 completed. That means we had 2/5 in conversion cost that we needed to add. Conversion costs are direct labor and factory overhead. So we're going to take the 2,300 and multiply it times 2/5 to get the equivalent units for conversion costs. Okay, so for beginning inventory, there was no additional direct materials added, so we're going to put 0 for equivalent units there. For labor and factory overhead, we needed to complete what was not completed in September. In September, 3/5 was completed, so we have to continue and complete the other 2/5 in regard to conversion costs. So if we take 2,300 and multiply times 2/5, and to put that in your calculator, you'd put in 2,300 times 2 divided by 5, and you'll get 920 units. Now let's move to the units started and completed in October. If we go back up here, we see that there were 23,400 units that we calculated as being started and completed. So that means that as far as equivalent units, all the materials were added for these 23,400 units, and all the conversion costs were entered for the 23,400 units because they were started and completed. Okay, so that leaves us with our work in process inventory. So for direct materials, remember they're added at the beginning of the process, so these were already added in October because at the end of October these units are in work in process, so the materials were added. Notice that in the beginning inventory the materials were already added and brought forward from September, so those costs are back in September. These material costs for these 2,600 units are or were added in October. All right, as far as conversion costs, our problem tells us that these units were 1/5 completed. So we know that all the material was added, and then they were 1/5 completed in terms of conversion cost. So 2,600 times the 1/5 will give you 520. So our equivalent units in terms of conversion costs were 520 units. Okay, so the total units to be assigned are 28,300. The direct material equivalent units is 26,000, and the conversion cost equivalent units are 24,840. So we're going to take these now and figure out our cost per unit. Okay, so now we're calculating the cost per equivalent unit. So first thing is we're going to figure out the total cost for blending, for direct materials, and conversion, and that's given in the problem. So for direct materials, let's go look. Here we go. Direct materials, 429,000 was added. Okay, and the total equivalent units for direct materials is 26,000. So we're going to divide the 429 in cost divided by the 26,000 units. So we're getting $16.50 per unit for direct materials. Okay, now we need to figure out our total conversion costs. Those are just simple, they're given. Direct labor was $100,560. Factory overhead was $48,480. If we add those two numbers, we'll get $149,040 as our total conversion cost added in October. So we're going to divide that figure by the number of units, equivalent units for conversion cost. So that was 24,840, and that gives us $6 per unit as far as conversion costs. Okay, step 4, we're almost finished. We're going to allocate costs to units transferred and to the partially completed units. Okay, so let's look at the bottom portion of our cost of production report. The first thing we want to do is to determine the total cost that we're going to be accounting for. So the beginning inventory in process was given to us at $46,368 right here. And then the costs incurred for October, you can do that a couple of ways. You could take the $624,408 and subtract the beginning inventory costs, or you can just add these three costs that were added. So materials, labor, and overhead were all added, and those total up to $578,040. You add those together, and then the total cost that we're going to be accounting for is $624,408. Now we'll take these costs, and using the equivalent units and the cost per unit, we're going to allocate those costs to the beginning inventory, the cost of the completed work and transferred out, and then the ending inventory. Okay, so let's start with the inventory in process. We brought those costs in from September, so those costs are now in October. All right, for the 2,300 partially completed units, remember the equivalent units for those were 0. So we had 0 equivalent units at $1,650, so that equals 0. That's how much. And then for conversion costs, let's find our equivalent units. Were $920, and those cost $6 each. So $920 times $6 is $5,520. Okay, so we have added $5,520 in cost for the 2,300 units that were not completed at the beginning inventory, at the beginning of the period. Okay, so here is the cost of the work started and completed. So once again, we go back to our equivalent units. So basically what we're doing is taking these equivalent units and applying the cost per unit to them. So 23,400 equivalent units times 1650 for materials gives us 386.1 for the materials, and then we'll take the 23,400 equivalent units for conversion costs and multiply those times 6, and we get 140,400. We'll add the two figures together, and that comes out to 526,500. So if we add all these three costs together, we're up now to 578,388. All right, all that was transferred out, so now we need to figure out how much cost we've got in the units that we started and didn't complete on October 31st. So let's take a look at the equivalent units there. Okay, we had 2,600 because all materials added at the beginning, so 2,600 equivalent units times the 1650 gives us 42,900, and then we had 520 equivalent units for conversion cost, and that cost $6. So our cost as far as conversion was $31.20. If we add these two together, we get $46,020. So added to the total transferred, our total cost that we've accounted for here is $624,408. So we know that we have accounted for all our costs that were added to the blending department. So let's just go back through our steps. It looks sort of overwhelming, but it's not so bad once you kind of understand the process. We started by calculating the total number of units that we were going to be accounting for, and we divided those units into the three categories: the beginning inventory, the units that were started and completed, and then the ending inventory. Then, using the units in each category, we calculated our equivalent units of production. And then in step 3, we determined the cost per equivalent unit. In step 4, we used the equivalent units and the cost per unit to calculate and allocate the total cost for all three of those categories. So if you combine all 4 of those steps, you will have completed the cost of production report for a process costing department.